this was a pretty substantial session where the markets just were dropping big time. And it started at the beginning of the week or toward the end of the month of August. And if you look at the end of August to this point, the NASDAQ's dropped 5.73%. That's a huge drop in 1 week. I don't think we've had this bad of a week since 2022. And 2022, actually, 2022. And that was a bad week. Semiconductor hasn't seen a week this bad since 2020 when we had COVID. So it was a pretty bad situation. Having said that, as prices fall, it's kind of emotionally, it's kind of like mixed emotions, right? You look at your portfolio and you're like, hey, it's not fun to see the value of my portfolio go down. At the same time, intellectually, I know I'm buying stocks at a discount. So buying into Amazon, something I'm driving towards having a substantial position in Amazon. Well, the stock market made it easier in buying in that company because it lowered the price quite a bit. So generally, the stock market just really went down. When we look at the VIX, and VIX is the volatility index, it's a measure of volatility. I'm going to go out a year because I think it gives us a sense of when was the last time there was this much fear in the market. And the last time we had this much fear was, looks like we exceed or close to exceeding where we were toward the end of 2023. And we did have a pretty good correction toward the end of 2023. It was a good year, all of 2023. We had a pretty good correction. And we've seen a lot of volatility over the last 6 weeks. So it just kind of goes to show that, if you have a market that has seen good gains, right? Because from the end of 22 up to now, the NASDAQ's still up 59%, even though it sold off this week. You're seeing investors kind of take some money off the table. Hey, they've made money on a stock. Hey, take it off the table, recognize that gain, and move forward. I totally get that. So there's a lot of concerns that stocks are priced high. The other story that is, I think it has a lot of merit is, are we going to have a recession? And I would say that, the answer is probably, but the recession isn't going to be too bad. It's not going to be one of these horrible recessions. Like the subprime mortgage meltdown was very difficult, especially for real estate related industries. I mean, it was pretty bad. There was a lot of layoffs. It was a lot of carnage, and there was a lot of collateral damage in financial services. But other industries fared a little better. They didn't go down as bad. And I think the recession that's coming doesn't have any like big catalyst that's going to drive it down. It's just generally a couple of things are coming to a head. One, I think stock prices are expensive, and that's maybe my personal feeling. But if you look at, over the last 5 years, they're up 106%. That may not look all that crazy, but if you look at, the gains that we were accustomed to 20 years ago, they're down here. And you look at these gains and it's like, holy smokes, man, it's a pretty vertical increase. So I would say that, okay, first, stock prices are a little high. Second, I think there was a lot of stimulus money being pumped into the economy 3 years ago to get through COVID. So that way we didn't have people that were unemployed or businesses that had to send their employees home. They wouldn't have we wouldn't have a depression basically. And all that stimulus money kind of went into the economy. The consumer is 70% of the economy. And I think now that we don't have any stimulus money, but we have to compare to those years, it's going to be tougher for businesses to compare to 2022, 2021. I think it's going to be harder for them to grow. That's another factor. Interest rates are lower. So I think a couple of things are coming to a head. I think we're going to get into it in a recession. So let me catch up to some comments here. Looks like Choffman, how do you think the election will affect the recession? I don't know that. So I think the election most definitely is going to bring more emotion to the market. Like, hey, if this candidate, gets elected, then policy is going to affect, gains in taxes in this way, or maybe this candidate might help, businesses better, stability of government and so forth. So most definitely I'd be, probably misjudging it if I didn't think there was going to be some effect. There is going to be an effect over the next 2 months. So now how it's going to affect a recession, I don't know. I don't know that either candidate is going to affect how the next recession is going to be handled. I think in general, the recessions are going to kind of take care of themselves because the businesses in the United States basically start to grow. They create products and services that their markets need. So all those things are are probably going to help, make this recession probably a pretty easy one or not too bad. That's my expectation. But I'm talking about recession as it relates to stocks. And I think that stocks we definitely had a really bad week, right? Down, the NASDAQ being down more than 5.5%. I could see us going down, 15 to 20% in the next couple months. I know that the week was tough. We'll see what next week does. I have to imagine that there has to be some type of relief rally. There has to be some buy activity because some stocks are really, really beat up. Let's take a look at a couple stocks, and please suggest any stocks you want me to drill into. I'd be glad to go where you guys want to go. But if you look at here's some gainers, but let's look at some losers. Nothing that I can highlight there, but a stock that we covered yesterday in the general stonk session was Broadcom. And look at that correction. 10% one day. And if you look at this stock, it had really run up. The whole AI data center build out has really pumped up the stock. And I'm not arguing that AI is not interesting. I think it's very interesting. But what Broadcom revealed that shouldn't have been a surprise to everybody is they're not growing 47% organically. They acquired a business, VMware, and that's what created the big growth. But if you read their earnings, they clearly specify that, hey, we had 4% organic growth, only 4%. So the whole story of AI is going to make the data center just expand very quickly, and Broadcom's going to benefit from it. Well, 4% ain't nothing. That's keeping up with inflation. So once investors got their head around that, that's what caused 10% down. And I've believed that Broadcom had been discounted. And I see the comment, Choffman, on NVIDIA. I'm going to move to NVIDIA next. But let me open up my valuation schedule here and go to Broadcom, which is now priced. What's their now price? 137 even. So I have to update that. So when we look at Broadcom, you had a 10% down day. Did I get that right? 137. Yeah. All right, and maybe I can close this guy partially. All right, so now that they came down to 137, they're not priced at a premium like I had before. And I covered this stock on my morning stream, but they're still substantially overpriced. They're priced at a premium of 37%. Now, what we're seeing is that this stock had run up to such a high price that it's going to be interesting to see, what is the chart going to look like for Broadcom? Is it going to, go up, go down at the same velocity that it went up? So it went up quite quickly over, let's call it, it went up over the course of a year and a month. It went up 175%. So if you're like, okay, it went up really fast and they have 4% organic growth. It's like, why did it go up 175% if you're growing 4% organic growth? Well, it matched that type trajectory to the downside. And FYI, there's a saying in stocks: you go up taking the escalator over time, you go down taking the elevator. So we may see like a really bad pull. I mean, we're already seeing a pretty bad pullback, but we may see an even worse pullback where you see, Broadcom lose a lot of value fast. If we look at Broadcom, okay, so the next question that was asked was, let's look at NVIDIA. So NVIDIA today went down 4%, but it's been going down a lot. NVIDIA is a stock that I've covered a few times, and over the last, I'm going to call it 2.5 weeks, it's down 21%. That's a substantial correction on NVIDIA. How is this stock going to behave? It's gone parabolic. Okay. Now there's another parabolic stock that is out there, and that's a super microcomputer, which just took off like a rocket ship. And it went parabolic, but it's ending very, very painfully for investors. Look at that chart. Went up and then it came back down. I don't know that NVIDIA is going to do that because I think NVIDIA does have greater value than super micro, but you can see that super micro over about 2 months went up almost 300% for a hardware company. Hardware companies are not that valuable. And since March 13th to now, it's down 67%. So it's getting crushed, and I don't know that it's going to stop. The downward momentum on super micro, it has got, I'll call it, it's got a lot of radiation. It's just undesirable. Why would you own super micro? At what point is it going to go up? I don't see what's going to stop the downside. And that's what becomes super painful to these companies. I'm going to show one more example that goes back in the history books, but I think it applies here. Going back in the history books, we're going to look at Cisco. They were such a great company and an important company for the internet, to build out the internet. They went parabolic. They had the best technology of the day, and the market just priced the stock way too high, and it just collapsed. And it took a long time for it to begin to rise, and it's never risen to the level it was before. This is a real company that had the best technology to build the internet. The internet is truly an industrial revolution. I don't care what the NVIDIA CEO says. AI could be interesting. It's not an industrial revolution yet. Show me more evidence of that and I'll believe it. But if you look at where Cisco went from its high to its low, 87%. Meanwhile, it was growing its business, it was profitable. Just the downside pressure and energy and momentum took this stock, and just destroyed the price of the company. And it was very hard to see the stock rally because everybody was getting burned on Cisco. They didn't want to touch it. So I think that's where Supermicro is going. I don't know where NVIDIA is going to go. NVIDIA is up here. It was up here. Now it's collapsing. I happen to think that NVIDIA is overpriced. I've done a valuation on NVIDIA. I'll show where I think the stock is priced. I think each share of NVIDIA, and I give them a very optimistic valuation. It's where each share is worth $75 per share based on free cash flows and earnings per share. So it would need to come down another $27. But what I'm saying is that once you see these parabolic stocks start to go down, the momentum really pushes past their valuation. Again, I don't know if that's going to happen in NVIDIA, but as it keeps getting slammed, I could tell you big money managers, these big money managers they're handling money for wealthy people. They're going to be exiting this stock and staying out of it because it's burning them with their investors, and they can't lose investors. Or they can, but they don't want to lose investors. They don't want to lose the confidence of their customers, their clients. So, if you see this down energy, it's down a couple, like 0.42% in after hours. This could become a really interesting situation where we see NVIDIA continue to go down. That's going to be super interesting. Now, we've needed this, and the reason for it is this is abnormal. It's wrong. It's artificial. It's, you give me the word. I get when a company has a great technology. I get that. But for it to go up, fivefold in what is 2 years, actually a year and a half, you just cannot explain it with rational fundamentals, rational valuations. It's a pretty bad situation, and we'll see where it ends, man. I'm shorting NVIDIA. I think I'm up like 12% right now. I'm going to get out if it gets to 30, and I'm shorting Broadcom. I'm up about the same amount on Broadcom. I'm probably going to get out of that when it gets to like 20, a gain of 20%. And kind of, I shorted Supermicro, walked away with a good gain. I shorted CrowdStrike, and I'll kind of cash in and kind of, I learned something along the way, which was, hey, I saw this and began to really put a thesis out there. And then I put some capital out there, not a ton of capital. I mean, it's not like I put $1 million and, oh man, I made this amount of money. I put enough capital out there where, if this thing went the other way and it ended up causing a 30% loss, it was a couple of grand that I lost, and I paid the market for that lesson. Instead, it's going in the direction that I thought it was going to go. But really, the next week or two on NVIDIA, it's going to tell us the momentum, and it's going to tell us the direction. And this is going to become potentially a very, very painful situation for stockholders. We'll see. We will see what happens. And the market is very, very interesting. But not only NVIDIA is losing money. Let's take a look at, so CRM's the next symbol. It's, I guess it's Booz Trader. 1 second, give me 1 minute. Let me just catch up on comments, and we're going to go to CRM. Yeah. AVGO and NVIDIA have been kind of correlated. Now, I would say that NVIDIA intrinsically is more valuable than Broadcom. Why? NVIDIA controls the intellectual property of graphical processing units, which is the best technology to use in high performance computing, which is what is in real big demand. So you cannot build large language models without NVIDIA. It would just take too long. NVIDIA is in control of what's the highest desirable, most profitable, highest value technology, period. Broadcom is nowhere near at that level. Broadcom is competing against their competitors. They do have intellectual property that's unique, but nowhere near as valuable. They could be substituted with other products. So Broadcom and NVIDIA are not at the same level of value. That's why I shorted Broadcom. And FYI, I was a stockholder of Broadcom as recent as late 2023. I've known a Broadcom for a long time, so I'm very, very familiar with the company. But I have to agree that the patterns are the same, but they're different companies. I would put that out there. So Golden's, they have doubled amount now for buybacks. Yeah, so NVIDIA buybacks. So when you're in a growth pattern, right? Like you're growing, like NVIDIA's growing their revenues quite substantially. And let me get to the NVIDIA chart, or the fundamental, excuse me. And I've talked about this on, like I did a long video on NVIDIA. And this is why NVIDIA went parabolic, is the growth, and that they're growing, you know, and they're becoming a really substantial company, 96 billion. Now they are cyclical, but when you look at the month over month growth rate, that's where the growth rates really slow down. And it's expected, just based on their guidance, that their growth rate is really kind of being cut in half each quarter. At a certain point within a couple of quarters, they're going to be growing like 15, 20%. And that's going to be like, wait, that's not very high growth at all. Exactly. And that's what investors are getting, you know, their heads around. They're doing buybacks. Now, if you're in high growth mode, you don't do buybacks. You keep the cash because you want to create more capacity to sell more GPUs. So I actually think their buybacks is a negative story. It's a negative aspect. It's like they see that they're not going to have the demand. They're not going to need that capital to buy inventory, to, you know, buy all the materials that are needed in order to fulfill, you know, demand that's going to come in 2025. So I actually see that as a, you know, tipping of the cards that NVIDIA, you know, is saying, hey, I'm going to buy back shares because we don't need that capital, because I think our demand is going to drop in 2025. That's a complete speculation on my behalf, but I'm an investor and I get to speculate and I get to invest the way that I want. But I'm glad you pointed that out. I think that's Golden's. Thanks for showing up. So let's look at CRM. So CRM is Salesforce. What have they been doing? I know that they did their earnings and they had good earnings, and I think they went down when they announced, but then they rallied the next day. Yeah, here we go. So let's look at the monthly. Yeah, they announced. When did they announce? Let's see. So they announced on August 28th. So on August 28th, yeah, I thought their earnings were pretty good, but no, they sold off. They've sold off 5.77. So something that I've noticed is software companies have not been getting a lot of love from the stock market. And traditionally, it's a great place for value. Microsoft's a software company. Software companies are very, very profitable. They have great margins. They have sticky businesses. They provide great free cash flow. But Salesforce has been kind of left off to the side, along with Adobe and other software companies like DocuSign, and as another example. And I would say it's because a lot of the attention's with the semiconductor industry and the hyperscalers like Amazon, AWS, and so forth. So that type of attention, and the investors have been routing their capital toward those hyperscalers. But I think it's a really good place to find value. I'm buying into a number of software companies because I believe that they're being priced a very good price ratio. If you look at their fundamentals and the cash they provide, these are good companies. Let's look at Salesforce real quick. Growth, and this is organic growth of 10%. I just showed you that Broadcom, who's supposed to be in this data center build out and everything's the craze around AI, is only growing at 4% organically. These guys are growing at 10. So that's very good on a very substantial number. Okay, good job. Good job, Salesforce. And when you look at their free cash flow for the trailing 12 months, $11.4 billion of free cash flow. It's very good cash. I would value Salesforce at around $240 billion, maybe a little better than that. And you can see that you're getting a small discount just based on my back of the napkin kind of calculation. If I take 11.4 times 20, it ends up giving me about 230. I could probably get up to 240, 250 because Salesforce does have a good balance sheet, if I recall correctly. Analysts like the stock. It's discounted by 25%. They primarily look at earnings per share when they value a company. I look at both, and I put more weight in the free cash flow valuation method that I use. And these guys here, a lot of analysts cover it. 34 analysts. I mean, this is a very well covered stock. And on average, they're saying, hey, they're going to be really doing well. So CRM is not a bad idea, man. It's not a bad idea at all, especially when you have these markets that are correcting, everything gets sold off. It's like the whole story. It doesn't matter if certain, stocks have a lot of value. They're doing well. They're growing their businesses. Like in the case of Salesforce by 10%, doesn't matter. It's being sold off. That's an opportunity. That's an opportunity for somebody who believes in Salesforce to buy shares at a discount. So it leads me to let's talk about our friends over at Google Alphabet. So Google Alphabet's down 4% today, and it's just a stock that I can say 100 good things about Google Alphabet. And you can see this over the last month, it's really come down. And I'm buying shares of Google Alphabet because I believe over the course of time, Google keeps getting stronger and better. They have the Google search business keeps growing, getting more profitable, being a better company. And the YouTube business is now the #1 streaming platform around the world. It's even bigger than Netflix. So #1, their Waymo business is really exciting for self-driving robotaxis. You have their cloud business, which is growing faster than AWS or Microsoft Azure. It's just a loaded company. Their AI business is really, really something. It's super valuable. It's got a pretty good grasp on the future. It's going to compete against ChatGPT and the other major AI companies. Having said that, as we look at a market that is correcting and just bringing down stock prices, Google is a better company than they were 4 years ago. Their YouTube business is bigger, their search business is bigger, their cloud business is bigger, their self-driving car business is really taken off. So over time, and more specifically, if you look at since July 1st, which would make it a month and two months and call it a week or two, they've dropped quite a bit. And let me try to grab that and give you a number. So from July 1st, or from here to here, they've dropped 7%. But in that time, Google hasn't gotten 7% worse. I would argue that they've actually gotten better. Over time, they're getting better and better and stronger. So as the market corrects and it starts really bringing down the prices of everyone's stock, it provides an opportunity to buy shares at a discount. And I'm looking at Google. This is high. I'm looking at CRM. I'm looking at the wrong stock. Sorry about that, people. Man, sorry about that. So from July 1st, here we go. This looks a little better to here. So Google Alphabet's down 20.75% in the last 2 months and a week. So again, my rationale is, well, did Google lose 20% of their cloud revenues? No, they actually grew. Okay, did they lose 20% of the YouTube viewership? No, it's still #1. And their search business, no, it's still freaking dominant. So the market's just really selling off a company just because, you know what, for a million reasons. But the reality is, I believe that this is an opportunity. I'm a believer in the Google business, so I'm gonna keep buying shares. That's the opportunity. When you look at companies, and Meta is the perfect example, right? And the same company, the market will abuse. It'll say, okay, we get you, Meta. You're #1 in 2021, but we lost, confidence in you. The whole market sold off, and Meta was sold off by 76%. And the business was still growing. They had their problems. The metaverse didn't work, but it was sold off by 76%. So much that it lowered the price so much that once it began to really lift and get to its true value based on cash flows and earnings per share, it just launched and it's up 451%. And I would say this growth is really, I would say, sustainable, and you can rationalize this growth because they are a larger company. Their cash flows have expanded. A lot of good things have happened. But this is the lesson, is when the market gets really going in one direction or another, especially to the downside, you can find the next Meta. We just have to pay attention. And it's really hard to time investments, right? So what I did is I bought through this whole range, okay? And I continue to buy shares of Meta. So I didn't time it perfectly, but I could tell you that I bought shares around the time when they were down in the 80s. So that's the lesson of these corrections and these crashes. We were down more than 5% in 1 week. At that rate, we'll be down 20% in the month of September. I don't think that's going to happen. We should have some rallies to the upside. We should have some flat days. Maybe we make it through September only being down 8 to 10%. But I think this fear is going to linger into the month of October. And maybe the month of October and September collectively will be down, 10 to 20%. That's the kind of correction I expect, because there are some stories that are real, like the economy is probably going to go into recession. We have an election. We have these things that are going to drive more fear. And that fear is going to cause investors to sell off and maybe say, hey, I just want to sell stocks. This is too ugly for me to see. I want to sell my positions and just go away. Okay, that's fine. That's not the investor I am. When everybody's selling and stock prices go down, I'm looking to buy. I'm looking to establish positions and try to buy in these zones so I could then see those dollars that I invested just rocket up when the market realizes, hey, you know, that company's awesome. I think the stock price ought to be higher. So that's the lesson we could take away. All right, so let's keep rocking here. Keep the comments coming. What other stock you want to look at? We went over Broadcom. I wanted to take a peek at DocuSign because DocuSign, believe it or not, was up 4%. Holy smokes, on a day when stocks got crushed, DocuSign stood up tall at 4%. There's good reasons for it. This is a software company. We talked about Salesforce a few minutes ago, and I talked about how Salesforce has a healthy business. Well, DocuSign's right there with Salesforce. DocuSign, you probably are aware, they do digital capture software. They're the dominant player in that space. And when we look at their fundamentals, you see that the company is growing 7.7% organically. Again, back to Broadcom. I'm going to keep beating them up, man, because that stock price certainly deserves it. 4% organic growth, and they were just shooting up, parabolically on their stock price. These guys are growing at 7.7% organically, very well. They also have great profit margins. You look at their gross profit on $2.8 billion of overall revenue, almost $2.3 billion of profit, gross profit. That's a great profit ratio. That's why software companies are so valuable. And when we look at their free cash flow, they cash flow on a trailing 12 months basis. They're at $919 million of free cash flow. It's very good because they're less than a $3 billion company. When you look at the cash flow ratio, they're cash flowing more than 30%. Okay, that's a very good ratio. That means that the business is generating more than 30%. Think of that return. I would totally buy any investment that's returning more than 30%. So I like DocuSign. I'm a stockholder, by the way. Their balance sheet's excellent. They have what looks to be $938 million of cash, and debt-wise, they have $802 million of debt. So they have more cash than debt, and they can pay off debt, very basically by writing a check. So very strong balance sheet. Net zero amount of debt. We talked about cash. And if I look at their cash, which was roughly $920 million, they're growing their business. So I'm going to multiply it times 20. 20 times 920 gives me about $18 billion, $400 million of value. But look at the market cap, 12 billion. So very back of the napkin, it shows a nice discount. Their stock price is $59.19. So let's take a look at the valuation I have on DocuSign. So DocuSign, I'm going to update the stock price. It's discounted based on my calculations, and I value a company based on free cash flows and earnings per share. They're discounted by 42%, even at their now new stock price, which was 4% higher. The reason for it is just really good cash flow. They're going to grow that cash flow by 5% over the first 4 years, in my estimation. They have an excellent balance sheet, and I could actually turn this into an 8.5 because they really deserve a lower discount rate, and it even makes them more attractive. But really, all these cash flows, the net present value, the cash they're going to generate in the future, I believe is worth almost $21 billion. They have really a high amount of cash, low debt. So their overall equity value, in my opinion, is $21.6 billion. So they have a very high discount if you look at free cash flows of the company and valuing them. Free cash flows, if you want to know where they're used, look at the most valuable companies on the stock market. They all generate high amounts of free cash flow. You look at Apple, Microsoft, Meta, Google Alphabet, they generate high amounts of cash. So that's why I use the free cash flow method, along with some of the great investors really depend on free cash flows and discounting free cash flows. Earnings per share is easier to calculate, and I use just to understand where that valuation is, but I put more weight in the free cash flow method. 2/3 of my weight here comes from the free cash flow method. And I think that they're actually discounted by 54%. I was buying DocuSign shares going into the earnings. I'm glad I did so. And I'm going to keep buying into DocuSign because I think they're just a valuable business. Lastly, what I'll say about DocuSign is I wouldn't be surprised if they got acquired, because another company that's maybe a 200 market cap value company or larger, I just talked about Broadcom, they acquired VMware. That's an example of another software company. So somebody could buy DocuSign for $1-2 billion of value, and they have to pay a premium on that. But they could very easily add the revenue, the profitability, the free cash flow. There's a lot of desirable things in DocuSign. And if somebody acquired DocuSign, they're going to pay stockholders like myself a nice premium. So that'd be really cool. So I like DocuSign. I mean, they stood up nice and tall today with a 4% gain on a day like this, a red day like this for a company stock to be up. That's saying something. And look in the after hours, it's still going up. Beautiful. So I love finding companies like this that I know, look at their fundamentals, look at their cash, look at their earnings per share, and kind of being there, knowing that, hey, I'm owning a company that has value, real value. They're generating profits. They're generating cash. This is a valuable company. They don't have any debt. That's good stuff. So DocuSign was a highlight for today. And let me tell you, I was looking for a highlight today, man. There was so much negative news. It's like, holy smokes, man. It's red all over. It'd be nice to just get one good story. We got DocuSign, beautiful. My bonds went up in value, excellent. My short positions, I've got short positions on NVIDIA, Broadcom, Vistra. All those short positions actually gained value because they're a short position. So the stock prices went down, which means when I close out the position and I have to buy shares, I buy them at a lower price. So all the short positions did well today. So it's good to see some green in my portfolio. But overall, I'm right there with most everybody else, which is, hey, my portfolio went down substantially this week. That's just the way, that's the game we play here. We're investing in companies, we're investing in stocks, and stocks go up and down. Over time, they have an upward trajectory. That's proven. Over 100 years of investing, it's proven that the value of equities will rise. But along the way, you'll find some stocks that really become worth close to nothing, if not bankrupt. And you'll find some shares that, boom, they go up, really fast, like Meta or NVIDIA. So a new comment, you short which shares? So let me take you through that real quick. All right, so I short. So I've got these in blue, and I know this is kind of an eye chart. So I'm gonna tell you the names, and then I'll kind of dissect each one. So I'm shorting NVIDIA, I'm shorting Broadcom, and I'm shorting Vistra, which is a utility company. It's one of these independent utility companies, because I think independent utility companies are way overpriced. And I'm shorting Apple because I think they don't have a really good strategy. So I'm shorting Apple, and Vertiv, which is an electronic equipment company that serves data center. And I believe that the data center, as I showed you with Broadcom, it's not growing as fast as everybody's making it out to be. And the Vertiv, all these short positions are in the green for me. Vertiv, and am I missing anybody else? I think that's it. I had Super Microcomputer in that list, but I closed that position at a gain, and I had CrowdStrike in that, and I closed that at a nice gain as well. So those are the four. When we look at, I'll look at my NVIDIA short real quick. So NVIDIA, and I haven't updated this, but basically this was, I created a video on NVIDIA every month just to kind of, I guess, log my short position. And I've been shorting NVIDIA since the end of May. And when I did the video at the end of August, I was actually down by 3%. But let's see where I'm at now. I'll do that on the fly here. So here's NVIDIA. Come on now. All right, so if I had to buy shares and return the shares to the rightful owner, I'm going to need to spend $6,533. But when I sold these shares, I received proceeds of $7,147. So right now I'm in the green by 9% on NVIDIA. And as the stock price drops, I'm going to continue to gain value on that. I'd like to see that number turn to 20 and maybe consider, closing it and maybe go to 30. We'll see. The story hasn't changed that I think NVIDIA is overpriced by 37%. I think the downward energy you're seeing in the stock price, and I think now it's $105. So it's not priced at a premium to the extent it was before. But I think that this stock, once it gets going to the downside, the energy that's going to be having that trend to the downside, it's going to be really hard to stop. I think it's going to go well past its intrinsic value and maybe end up being a $70 stock, $50 stock in the next 6 months or so. I don't know. That's possible. That's within the realm of possibilities. This stock was trading not too long ago. Where was the stock trading? Let's take a look. So not too long ago, it was trading at $135 a share. Now it's trading at $105, $102 a share. Wow. So it's dropped 24% over the course of what looks to be 2.5 months. So if it's dropping that fast over 2.5 months, give it 6 months, it could drop another 25, 30%. We'll see. We'll see what happens. It's certainly going to be an interesting story to follow. So, hey, good question there. You know, when I contacted my broker, I don't have to pay margin rates on my short positions because I have the cash. I have the cash to cover the entire stock amount. Now, what basically is happening is I'm borrowing from myself. And that's the way my broker handles it. And therefore, I don't pay any interest rate. But my money isn't earning interest either. So if I short a stock that pays a dividend, I do have to pay the dividend when that dividend comes due, which is rational and I think fair. So check with your broker. My broker, that's the situation I'm in. I don't have to pay an interest rate on margin. I think if I didn't have the cash, then I would have to pay an interest rate on margin. So check with your broker, see what the policy is. If you have the cash, you borrow it from yourself. And that's that. So good question. All right. So we talked about NVIDIA. I wanted to talk about DocuSign and Broadcom. We did so. Let's see if there's any other comments, any other stocks you want to talk about other than where we're at in the market. Now let's talk about what's going to happen. So we have a market that's just, I mean, you know, just to use a football analogy, it's like a linebacker just freaking crushed the market. 5.73. Now that's a punch in the face. What's going to happen next week? I mean, I'd be surprised if we continue on this sell-off. It's just, I think, especially Mondays tend to happen. We may see a rally on Monday because I think investors are going to be like realizing, like I was showing CRM earlier, Salesforce, hey, there's really good discounts on good companies. I think that as we see a rotation into other sectors, like here I'm showing you sectors. There's 11 sectors that all these stocks, we have thousands of stocks, and they get, you know, think of a pizza and it has 11 slices, and we got real estate companies, consumer staples, and so forth. And the one-day change across all these sectors, real estate made it through with the least amount of losses in general, and the one that came out worst was communication services. That's where Google Alphabet is. That's where Meta resides as well. And that's where they stack ranked. Now, I think on Monday, you're going to see investors say, yeah, I'm going to buy some Google because, man, I don't believe that I think it's a great business, and the company, the market is discounting the price substantially. So I'm going to buy some Google and so forth. And I think that there is going to be a rising market to some extent because I don't think I'm the only one that's buying shares. I bought a lot of shares today. I bought mostly Amazon. I bought Google, Meta, well, I didn't buy DocuSign because it was up 40%. I bought Uber. I bought like 20 different company stocks. I was glad to buy them because I want to be an owner in those businesses. Now, if we look at, that's the one-day change. If we look at the monthly, the best performing sector for the month was financials, then consumer staples, consumer discretionary. I really like healthcare. Healthcare stood up tall today. I have a number of healthcare companies, and they stood up tall. Elevance is probably my biggest holding. Elevance is an insurance payer, and I think it went down like 0.1%, which on a day like this is like a big win. So I was glad to see that healthcare stood up tall. Healthcare does well in recessions. I think it's been left behind because, you know, all the investing, especially for growth companies, went to AI, but now that's beginning to unravel, and like the AI investment isn't as cool as it was a year ago. So I think that capital is going to be looking for a home. And I think healthcare, especially high growth, high tech, high growth biotech, is going to become really attractive, as well as the good old fashioned healthcare pharmaceutical companies are going to look attractive. So I'm putting capital into healthcare. Consumer discretionary, you got to be selective of where. Consumer discretionary does include like Amazon because it's an e-commerce company that's put into consumer discretionary. So those are some pockets of opportunity going forward. I think, you know, it's a stock picker's market. There's no general kind of like, if you buy into this sector and so forth, you're going to be good to go. No, you need to do your homework, in my opinion. You need to do your homework on every company, understand the fundamentals, understand the profitability, understand the trends that are going to help that company. All those things matter. And if you buy quality is going to stand up tall. Even if we have downturns, if we have recessions, good quality companies are always going to do better and weather those storms better. So we got BR625 wants to look at BWLP. Another shipping company, man. You guys have been asking about shipping companies. I should go on a cruise just to celebrate all this interest in shipping companies. So BWLP. So I would say the past week, we've looked at Zim, Panel. Man, we've looked at like 5 shipping companies. This would be shipping company number 6. So these guys, real quick, what do? So they engage in ship owning and chartering activities. The company operates shipping and product services segments. So they do liquefied petroleum gas. Okay, so so this is liquefied petroleum gas and LPG. Okay, and this is needed. You get it from where it's extracted and it's processed to some extent because it's liquefied, and then they have to get it to a market that uses it. In some countries, they don't have any resources and natural resources where they can extract their own natural gas or oil. So you need these ships to get them from where the oil or natural gas is being extracted over to the country or region that's going to be consuming it. So this, no matter where the prices are for LPG or oil, these companies will continue to be in demand. Wow, look at these growth rates. Holy smokes. These are high growth rates. It's a smaller company, but man, these are awesome growth rates. So looking at the quarterly, this looks really good. So I would want to know, why are you growing so fast? Are you putting more ships into service? And you used to have, just to keep it simple, you used to have 10 ships, but now you have 20 ships. So your revenue doubled because you put more capacity out there. That's a question you should be able to get from going through their earnings announcements and understanding their balance sheet. If you look at their balance sheet, we could probably look at that really quick. The balance sheet's going to tell you all the assets they own, right? So we have assets here, and they're probably going to have some long-term. See, there's a long-term. Sorry. So total assets, plant, property, and equipment. Is that where their ships are? Yeah, probably. But look at that. It's stayed steady. So where's that? How are they generating more revenue if their number of ships stayed the same? Let me think here. Let me think. I'm trying to see what the heck's going on here. So plant, property, and equipment. Let's look at their long-term leases, which they may be leasing ships, but that isn't too bad. Their debt's low. There's a lot of value in this company. So they're increasing their revenue while keeping their asset level the same. That's a surprise, but it's a positive surprise. It's like, how are you generating more revenue with the same assets? Are you doubling your rates? Is there so much demand for your shipping services that you're being able to charge your customer more money? There's a lot of value here. I'm seeing value. Okay. So you got this revenue, gross profit, because this is shipping. It's not like software. It's still a very respectable level of gross profit. Let's look at cash, because I'm focused on cash, man. You show me cash, I can tell you what a company is worth based on my calculations. It's been a cash positive company for its last 5 years. In the trailing 12 months, 656. When I look at the last 5 years, if they have positive cash, it gives me confidence that they're going to keep producing free cash flow. I don't like seeing like 1 year negative 500 million, next year positive 400 million, year later it's negative 100. Then it's like, well, what's going to happen next? It's just a complete guess. But these guys are showing that no, we are consistently a free cash flow operating company. 600. So a company like this, I'd probably value it like 5 billion, 6 billion. Look at that, $2 billion company. What's the stock done? It's done well, man. It's done well over the last year. It's up 13.5%. Not too bad. It's had a nice pullback recently. It's probably because oil prices and liquid natural gas prices have come down. But again, these guys aren't selling the natural gas or the oil. They're just getting it from point A to point B. There's a lot of value here. I'm seeing a lot of value to the point where I'm gonna put a little star next to this guy. I'm gonna do a little more homework. I'm good to go with Zim, unless this one is like so good I can't resist. I might buy some shares and look to replace Zim. Last time I did that, it worked out nicely. I used to have Penel. It was a big winner, and I switched horses, or I guess I jumped ship. That's an analogy, and pardon the pun. So I could see myself looking at this stock and falling in love with it, and maybe keeping it around at least on my watch list. But there's a lot of value here. There's no doubt about it. These guys are generating free cash. They're growing their business. To me, when a company grows their top line revenue, it shows that their product is desirable, their service is desirable, they're getting more customers. Organic growth is what shows you the strength of a company. And that's strong. Free cash flow is strong. Balance sheet, did they have a lot of debt? Let's take a look at that. There's got to be a problem with this company. What's wrong? So not too bad on the debt side. I know they have to carry some leases, but I think we saw that. It wasn't too bad. So long-term leases, 71. So 450. So So they have 450 long-term debt, and they have 267 of cash. So net like 200 million, and I think their balance sheet's solid. Their EBITDA, they could pay off their debt in 4 months. So debt's not a problem. I want it to be debt to EBITDA less than 3. You can be able to pay off all your debt in 3 years. It should be triple this EBITDA number, and you can look at net debt. I like looking at net debt. So there are no red flags, only green flags, but I got to do my homework on this. It looks really good. I think the oil complex and the natural gas complex right now is really discounted. And the reason for it is that when you look at oil prices are really going through kind of a, call it a recession. If you can see this graph, and sorry, I have to show you CNBC. These guys advertise too much on their website, man. It gives me a headache. But you can see that oil prices are at $68 a barrel. Jeez. Not too long ago, they were up in the 80s. I mean, in July, they were in the 80s. And now we've seen, oil prices just go downward. And I think that it takes the entire oil complex, natural gas complex down. But again, these guys, it doesn't matter if the price of the commodity is low. If somebody needs this natural gas for the winter, let's say in Eastern Europe or Northern Europe or Northern, Asia, if they need it to stay warm, they're going to get it, and they're going to pay the shipping rate, which is not based on the commodity price. It's based on what the shipping rate is at that time. So I think we could separate the two and probably value this company. This is not a bad idea. It's actually a really good idea, and I'm going to do more homework on it. Thanks for the suggestion, man. That's a real good one. Carvana, you want to, are they cooking the books? I can't answer that. I could just say that, like, Carvana, they were left for dead, man. The market said, you know what? We don't believe these guys have been through hell and back. And actually they died and went to heaven, right? We did COVID, and then used car prices just went through the roof, and people wanted to buy used cars. So their stock just took off, up 1,129% in, a year and a half. And then the price of cars collapsed, used cars. And the market said, these guys are horrible. They shouldn't exist. We're going to discount it by almost 99%. The company was valued at 1 penny to the dollar of their previous high. Isn't that crazy? Oh, man, I'm not making this up. You're seeing the data, right? You're seeing this. Take a screenshot. The market said, Carvana, we don't care how cool you are. We don't care that you have one of those, car carousels. It's like a vending machine. We think you're only worth 1% of your previous high. That's ridiculous. And then the company was close to bankruptcy. They were having liquidity issues. And once they got through that, the stock has really rewarded investors. Let me try to catch that. Up 3,000%. Holy smokes. Oh, I did not invest in Carvana. It's not the type of business that I invest in. But everybody who was an investor, good for you. And good for Carvana. I mean, I'm sure they have a bunch of employees that did not lose their jobs, which is good. Now, they're still just a small cap, 16 billion. But let's look at their financials. Revenue-wise, they're growing their revenue. If we look at the quarterly. So this tells me the business is growing. It tells me customers like Carvana. They like the experience. They're buying cars from Carvana. Their gross profit isn't setting any records, right? This is the car business. Very low margins, but they are growing their revenue. And from a free cash flow perspective, we're still looking at the quarterly. I don't want to look at the quarterly. Let me look at the annual. When we look at free cash flow, look at that cash flow. $738 million of free cash flow. Now, I don't love this business, but I could value these guys at around 7-8 billion. And right now they're priced at 16 billion. Part of why their value is so high is that they defied all odds and did this and rewarded stockholders so well that other stockholders want some of this. They want some of that 413% gain that stockholders who believed in the company and put some money down are sitting on a 4 or 5 bagger, and other investors are coming in late saying, oh, I want some of that. Hey, look at the past. It's going to tell me the future. That's not the case. So I think that stock now is priced too high. Now, the whole question, are they cooking the books? I don't think so. I think that the company has been through hell and back, and I hope they make it. I hope they make it as a business because a lot of people are employed by Carvana. They also are breaking the paradigm of used car sales. And let's face it, used car sales, the experience for the customer is horrible. It's an analogy that people use. Hey, don't be a used car salesman. That's to tell people not to be as greedy and, dishonest as what that industry has kind of earned as a pretty much kind of image. So I think Carvana is a positive player in the economy. I can't answer your question on whether they're cooking the books. Their auditors have to look at their books and release the audit reports. And in general, I don't believe that companies misrepresent their numbers. I think in general, most companies present their numbers fairly. There's a reason behind that is most leaders of companies, they have a lot to lose. They got to the leadership role and they've probably amassed a lot of capital, a lot of savings. They own a pretty nice home. They probably have a pretty nice lifestyle. And they know that if you cook the books and it goes found out that you purposely misrepresented financials, you will be broken. The legal system will crush you. And that's happened over and over again. Your family will disown you. You will go to prison. You will go from living in a really nice mansion to a jail cell. You will go from driving a Ferrari or a Lamborghini to sweeping the floor of a mess hall in prison. So that's a pretty big deterrent. I think a lot of these officers are like, you know what? I ain't going to cheat the system because if I get caught, I will get destroyed. Legally, my image, my reputation, everything gets thrown down the tubes. So I think it's a strong deterrent to keep, even founders from misrepresenting financials. So I would say that it'd be surprising if they were cooking the books, but I don't know. You'd have to do your own investigation behind that. All right. So, all right, everybody, this has been a really cool live stream. I appreciate all the questions. This is the last call on any other stock you want to look at. I wanted to do a stream because frankly, I'm going to use some foul language, but the stock market got its ass kicked. But I'm here to tell you it's an opportunity. It's an opportunity to buy the companies you want to be an investor in at lower prices. I bought a lot of shares this week. And next week, if it does the same thing, I'm going to buy more shares. And it's not a fun process, okay? I don't like seeing my portfolio go down tens of thousands of dollars over the course of the week. I'm going to stop sharing my screen for a minute and go to some private information and tell you how much I lost this week, but I haven't recognized the loss. So this week, I haven't even added up all the numbers, but I'm probably down like 35, 40 grand. Not fun, but I've had weeks and months where I'm up 100, 200 grand. So these things kind of level off. This is a really bad week. It's not fun to see those numbers, but I'm here to tell you it's a big opportunity. If you're a young investor, you're new to investing, yeah, this could be overwhelming. It could be like, oh man, I don't want to put my money into something and like Broadcom lose 10% in a day and kind of be really undesirable and so forth. You got a good point. But I think if you can learn process and learn to take in good information, bet on winning companies, and you continue to save your income, continue to amass capital, you'll have more money than you can imagine. You'll probably sell yourself short if you're like 25 and say, hey, when I'm 45, I want to have this amount. You'll probably sell yourself short. You're going to have much more if you pay the price, which is you learn, you put in a lot of time and learn to be a good investor, learn to use good process, which is, you bought the company for these reasons, you track the company, do your homework on it. You see the ups and downs, you try to understand their financials. Every quarterly announcement, you study that and you become very, very well informed on companies. If you pay the price, which is really get to know your investments really well, and you keep putting capital into your investments and know how to pick out the winners from the losers on stocks, learn your process, the lane that's going to be successful to you, you're going to be incredibly successful. But these weeks, don't get discouraged. These are tough weeks, but they don't last. When we look at graphs, just to end on a high note, One second. I'm getting there. All right. So to end on a high note, when we look at the NASDAQ over the 5-year, this graph is going up and to the right, but it's not without adversity. We had COVID come out and the stock market sold off very quickly, painful. We had 2022 happen. The NASDAQ sold off by 35%, painful. We had this week, painful. But you look at what you'd have done over 5 years, you would have multiplied your money times 2. So if you had 100 grand at the beginning of this, you have 200 grand. And along the way, if you kept adding capital to your savings, you have more than 200 grand. You have probably in the neighborhood of 250, 300 grand. And if you do that every 5 years, double your money, you're going to have plenty of money when you wake up 20 years later. So that's the note I'm going to leave you guys with. I appreciate you guys attending. I stream every morning, 9 a.m. Eastern, to open the market. And I'll stream in the evenings, afternoons when I think it's interesting to stream. And today most certainly was a good day to stream. And I really appreciate everybody attending. And I'll stream on my channel a lot of recordings of videos I've created, and I'll stream them. I hope you find them interesting. I'm open to feedback. Please provide feedback to make my videos better, make my streams better. I'm not the world's best streamer. I think you realize that very quickly. I'm an investor that's learning how to stream. So I'm still in my rookie year of streaming. So I really appreciate everybody's patience when I probably did something that wasn't as smooth as other streams probably have done. So with that, everybody, enjoy your weekend. Have a couple nice days off. For me, I'm going to watch some football. I'm going to eat some good food. I'm going to hang out with family. I'm going to do some homework because I want to make some money over the long haul. I think there's opportunity now, and I want to be ready for Monday. And I want to be ready to take action next week. So with that, everybody, take care. Thanks for attending.